Welcome to Hawkeye Traders. My name is Randy Lindsay, host of today's live interactive session. I'm here to educate and inform you on the proper use of Hawkeye on the live edge of the market. If you have any questions or comments, over here on the right-hand side of your GoToWebinar control panel is a questions pane. Please enter your question or comments there. I'll be more than glad to get to them in the order that they are received. I want to remind everyone that we are here for educational purposes only. We are not registered trading advisors, so we cannot tell you whether to buy or to sell any specific indicator or any specific instrument. But I want to make sure you understand that trading in these markets, there is a great potential for reward, but also a large potential for risk. Make sure that you understand these risks and are aware of them, and you are willing to accept them in order to invest in any of these markets. Please don't trade with money that you cannot afford to lose. Just remember that past performance of any of the systems or methodologies that we discuss here is not necessarily indicative of future results. Please use common sense in your trading. Get advice of a competent financial advisor before investing any money in any of these financial instruments. Make sure that you never trade in a live trading account until you have first proven you can consistently and profitably trade in a simulated account. And then and only then can you start the arduous task of trading with live money to get your mindset in play. Because trading with paper money is good. It helps you to exercise your skills and to get your trade shoes on. But when you're trading with live money, then your mind starts playing with you. And so you have to start working with that as well. So start small, work your way up, then get the confidence you need. We sell the software and the tools to help you to gain that confidence and to have a definitive plan for tackling these markets. And that's what I'm here today to show you, is to demonstrate the Hawkeye tools and systems we have available for you and to help you to develop a trading plan that is sound and ready to go. DK asked a question. I really like the idea of the Fatman, but how does it really work? Okay, well, what the Fatman does is the Fatman is a tool that helps you to see individual currency strength and weakness. For example, the US dollar on the 720-minute chart is showing extreme weakness on the 27th. All right, so you can see that that extreme weakness was overweighed by the Japanese yen, which is showing extreme strength. All right, so we know that things based on history tend to cycle between extremes, between extreme strength, back down to weakness, and then back up. Extreme weakness comes up to strength, and then back down, and so forth. And so we can see the cycles tend to go from overbought range down to an oversold range. And the midline we refer to as fair value. Okay, so when price is hovering around this area, relative to strength, we see that we are hovering in a fair value range. So the extremes are usually hit, fair value is usually the target. All right, so when we see the exchange of energy from one currency to another, those are usually very good pairs to trade in. So as you see, the weakness of the US dollar versus the strength of the yen, you can see weakness of the dollar versus strength of the yen, a downtrend. But now we're starting to see just the opposite. We are seeing on the longer term trend that we have bottomed out on the US dollar. The Japanese yen has topped and is starting to trend down. So the trend of weakness now, we're starting to see strength come back. Right here, we're starting to see strength in the dollar and weakness in the Japanese yen. Okay, so that cross and then the trend, the sharpness of this curve versus the steepness of this fall is showing in the volume and the charts. We're starting to see a turn in the direction of price based upon the release of all that energy. Okay, so things that are usually overbought become oversold and vice versa. So these are the turning points that we're looking for, that the Fatman shows you. Also, compounded with that, we see volume giving us a very nice signal that extreme bottoms and high probability reversals are intact. So we're starting to see a price extension, a pivot, and volume supporting that price move. You usually only see those when you see the market starting to make a turn. And on top of that, we have come down into a known zone where buyers have been resting. So we call this a support or a demand zone. And it's an aqua color, which means it's the first time that price has come back down to this level since it has been established. So if we expand the chart, we can see it's been trading in this range for quite some time. Okay, it's come into it, come out of it, come into it, come out of it. All right, but this is the first time it's come back to this particular zone. Now we have two zones in a row, which is indicative of a trend. So when that double zone gets hit, the first time it's hit and bounces back off of it, we refer to that as a money bounce. So this is a high probability reversal where we're looking at least 113.08 as a target, maybe even 113.90, because we're looking for a retracement back to prior highs once we see that, okay? So this is the analysis that we do. This is what the Fatman was telling us. So we're looking for the longer term direction of this. This is the daily, this is the half day, this is quarter day. So you're looking at a quarter day trend that's going to give us a potential signal that we might be able to capitalize on that might take us back up into the high 113s, if not all the way back up to 114 or higher, depending upon what's going on. So we're looking at that, and that's how we read and analyze the information that the Fatman gives us. So the Fatman, even though it is a quote unquote a lagging indicator because it's looking at that, it's plotting and giving you a relative strength graph, which actually is predictive in nature based upon the evolution of energy and strength in these instruments. Okay, so we've been able to separate out each one of the currency pairs so that we see the euro as green, the Japanese yen is purple, the Swiss franc is white, the Canadian dollar is yellow, the pound orange, New Zealand is blue, Australian is red, and US dollar is aqua. So these are the settings, and we use multiple time frames to help us to see how that evolves over time. So you can see that a 720 versus a daily, if I were to change this to a 360, then that same Japanese yen that we saw that was extremely overbought had gone overbought, but then oversold. I mean, then it, after it triggered from overbought, then it came back down and has been kind of teetering back and forth around fair value based upon a 360. 720 will just take that and double the time, and you can see that that same cycle that we saw here came down and was simply just a nice trend down. And you can see that on the longer time frame, we're just now starting to turn. So this turning is this right here, but you can see it's spread out. Now move this back to a 360. You can see that that right there was that topping. So you can see this coming up was the longer term. So all of this is occurring within this time frame right here. Okay, and if you go even closer in time, half of that was a 180. You can see the same thing. The Japanese yen is just topped out at the same time, but you can see that it's gone quite a bit over a 180 period of time. It's oscillated back and forth considerable amount of time. So depending upon the time frame that you trade, multiple time frame Fatman help you to see that. Right now, if we're trading off of a 360, then twice that time frame is the setup for the Fatman. The idea of the Fatman, there's three different time frames that you trade. You trade, if you're trading less than an hourly chart, like you are here, this is a 5, 15, 30, or a 15, 30, 60-minute chart, then you want to look at 3 times the time frame of the chart that you're trading. So if I'm trading a 15-minute chart, 3 times 15 is 45. I'm trading a 45-minute Fatman. And the 45-minute Fatman gives me the information I'm looking for. I see weakness in the Japanese yen. I see strength in the US dollar. So I'm looking to be long the dollar Japanese yen based upon my setup. It looks like I have a pretty good slope. And so you can see that the time in the setup there, if I were to link this, At this point, you can see that right there, I just started to see some strength coming from the dollar. The Japanese yen is just oscillating around fair value. I would have been looking more at the euro or possibly even the New Zealand from this perspective. But you can see that you're just starting to get a very good base of volume building up. Okay, and the first break at this point, okay, you can see that the first break of that point is at that point. So this gives you a very nice entry signal if you're looking at trying to trigger that. Because second time frame here, volume, momentum, third time frame, volume. So everything at that point for 15 looks good for an entry to take this as a long. You don't know what's coming ahead. You just know that that setup has given you all the criteria from a longer term perspective that this is an entry. And the Fatman is the one that showed you that. Trading off of a 5-minute, then you take that times 3, you put up a 15-minute Fatman. And the 15-minute Fatman, again, right here is where your dollar has circled back and starting to come back with strength. But at that same time, the Japanese yen also is rising with strength. So this isn't a particularly attractive chart at this point. Okay, it's not until the dollar continues to go in strength and the Japanese yen starts to weaken that you're starting to see any type of a potential entry. And it's not until right there that you start to see some real weakness coming in the Japanese yen. And there, at that point, you've already gotten a trigger signal right there to enter, to take that trade. So either way, you're looking for the strength or the weakness to come into that trade. The charts, you don't trade off of the Fatman, but you do look at the chart, and it gives you a heads up ahead of time that the signal is about to go on the chart itself. Using a daily chart, Marcel, let me go back to the daily. How much time would it take to get it? It could take quite a bit of time, actually. This right here is just showing the evolution of that energy. So based on this daily chart, the daily signal isn't going to trigger until you've already gotten to the target. That's why you're trading these shorter time frames. The longer time frame is just showing you what the potential setup is and where the supply and demand. But if you're trading the 360, then 720 and daily give you a good picture of the direction that you're going. And this is a good setup. This looks like very quickly that it's going to be triggering. If this closes at or above its current price, then we should be getting a signal probably today or tomorrow on an entry for this. And then, of course, you'd be holding this for probably 3, 4, maybe even 5 days a week, potentially, if this were triggered. If we had taken this initial signal, see the double dot on the roadkill, we got a trigger signal for entry here. This was taken on the 15th, and it would be either if you had taken levels or if you exit when it hits the stop, then that would have been what, 13 days, almost 2 weeks of hold on that. So it all varies based upon the chart that you're trading. So, but how long it takes is going to be a measure of the chart, and that's all. DK's been reading about volume for quite a while. You don't have a firm grasp on it. When I'm looking at volume bars, what are you looking for? Am I looking for extreme highs or extreme lows? Actually, you're looking for a couple of things. Number one, you're looking for volume color. Hawkeye's volume is color-coded with 3 specific colors: green to indicate the presence of buyers, red to indicate the presence of sellers, and white to indicate the presence of neutral sellers and buyers. So basically an equal number of buyers, equal number of sellers. We interpret that as there's no demand being placed on the instrument at that point. You have the equal number of buyers and sellers. It's a vote of no confidence in this market is what that says. So we look, those are 3 important colors to make note of. Magnitude then becomes the second criteria to see, because you want to be able to look at the the amount of volume relative to the price action. That's the second thing. And of course, I go through most of this in the training area. So if you want a little more detail, then I recommend you go over to the resources area of the Hawkeye members site. And then within that resource area, scroll down here to the video archive. Here are the volume training webinars I've given that specifically talk about volume and volume only, and how to use those with your existing tools like the MACD, stochastics, and other tools like that, moving averages, and how volume helps you in trading just with those. And so it's the foundation of what we do, but it's primarily just volume training. So make sure you take advantage of any or one of those. They're all the same video, just done at different times. And so you can get multiple nuggets of information on each one, because sometimes I cover things in a little more detail than others. All right, so, and then the third thing you want to look at is the location of those volume bars relative to time. So for example, a green price bar is fine, especially with high volume, but when that green price bar is making new lows, and we get a pivot on top of it, and let me magnify that for you here real quick so you can see that just a little bit better. See that big green price bar there with a yellow pivot dot on the bottom? I call that a volume extension. I mean a price extension with opposing volume. When you see a price extension with opposing volume, that is a high probability reversal signal. And so that is volume telling you, and the market along with price telling you, that the direction of the market is changing, and you need to be aware of that. And when you start to see that in the tops, okay, you start to see these topping patterns where you've got volume coming up and price coming right back down again, then that's the market also telling you that it wants to correct. Okay, see that? The market's telling you it doesn't want to go that direction any longer. Price is extending into new highs. It's coming off fast. It's trying to trap retail traders at the high of the day, and then it's going to come back down pretty hard. Okay, so you want to be aware of those and notice those. And so volume helps you to see, to use those to your advantage, and to be in the right place at the right time. Don't be trapped in the low of the day or the high of the day if you're using volume. And of course, our whole system is based on volume, so everything that we do is volume based. So yeah, extreme high, extreme low volume might or might not be a key indication. Our volume radar shows you the significant volume bars you need to be aware of. Volume radar points out this as a significant volume bar because it is very high volume relative to all the previous volume around it. This blue dot shows you extremely low volume relative to all the other volume around it. When you see these extreme low volume, that also tells you something about that market and what the market's doing. And then there's one other one, it's a red one, and I don't see one on this one, but a red dot indicates ultra high volume. We usually will see those during breakouts or exhaustion. When we see those exhaustion bars at extreme ranges, we know that the trend and price is over and the market is looking to either go into consolidation or reversal. But generally, there's a period of reversing following these exhaustion bars. All right, I hope that helped answer your question. Let me go ahead and turn that off. I don't have my NinjaTrader ready this morning because my NinjaTrader license expired for some reason, and I'm working with them on reestablishing that. I don't know why I got a big message this morning that said it had expired, but I apologize. I don't have that the NinjaTrader ready to show you this morning. So this morning I've got MetaTrader 4 and TradeStation up and rolling. So if you have any questions with regards to that, I'll be glad to show you. I do have NinjaTrader 8 up. For some reason my license is working on 8 but not 7. So I've got a couple of charts, my basic charts set up for that. But we can do that. Does volume work on cryptocurrencies? Absolutely. If you have a data feed, then it'll work on it. Absolutely. For commodities and futures, absolutely. Let me pop over to that real quick. Let me show you the. Whoa. Wow, that's a really nice move. Okay, you can see ahead of time, ahead of this market, that this is the Nasdaq. It's a futures market. You can put in the commodities as well if you're doing corn or wheat, currency futures as well. Any of the commodity markets all work extremely well. Let's see, yep, there we go. Soybeans, wheat, corn. I heard corn's been doing quite well. Yeah, see, usually the commodities give you really nice trends. They're mostly longer terms, but if you want to trade them intraday, they can be traded. They're pretty nice charts to use, and volume absolutely works well on those. I prefer to trade the commodities on the longer term charts. All right, so if you're looking at the setup of the charts there, the longer term charts give you a much better picture of that. And of course, volume is very key in understanding the direction of price in commodities. So in doing those are the ones that you want to keep an eye on. Right. And of course, these are my equities as well. So it works not only with equities, ETFs, futures, commodities. Here, I'll pull gold back up. There's another one that I keep a very close eye and watch on. Gold is still in its consolidation range right now, has not broken from it, but we are watching the base. It broke from its downtrend, so we're looking for gold to start looking at a nice rally. It hasn't done it yet. So we're waiting for that to confirm one direction or another. But gold on the longer term, using the fat boy, the gold, this is a daily fat boy where I'm looking at trend of gold, the trend of crude oil, and then the trend of other markets. Here, this purple one is the Russell 2000. This is the S&P 500, the red one. The green one is the Nasdaq, and the white one, the light blue one is the Dow Jones. Okay. So they are all trending with strength right now, with the mid caps all doing the strongest. Russell's making all-time highs again, so you can see all that. But gold is also building. It's building with a lot of strength, but the price is only slowly creeping along. It has not gotten there yet, so we'll see. If this starts to turn, become overbought, and then turn back down without any push, then it's probably going to correct pretty hard before it goes back up again. On the monthly chart, it gives us basically the floor. So this was the resistance it had banged its head on for years. Okay, years after years and years, just banging its head on that, and finally it broke through. And so prior resistance becomes current support. So now this is the stick in the mud, the support range. So that'll give us a measure of a potential drawdown that gold could do and still be in a breakout mode to continue. And it may just stay in this nice pattern for quite some time, and then that will give us a nice floor of direction for where we're going to be heading on the gold front. So that's my idea as far as how to use the software to analyze futures, commodities, forex, equities, and even options. I use these all the time to trade options because whenever I put positions on, then I like to have options there to help me to cover and hold my positions on the longer term. Okay, questions. Richard wants me to talk about the fat boy. Okay, I did a little bit here on the daily. let's go into the intraday. Uh, the Fat Boy is a unique tool in that it shows you the relative strength of 6 of the most common instruments that you like. So you can put in any instrument that you want, but this will show you the six that you put in. So if I look at the symbols, I have on this particular Fat Boy all of my E-mini futures. So I've got the S&P, the Nasdaq, gold, Dow, mid-cap, and crude oil all listed here on these. I'm currently trading off of 1 minute for the first 45 minutes of the day, and then I switch over to 3 minutes for the remainder of the day, and that gives me a really good indication of the strength versus weakness of any of these currencies, and it also helps me to measure the correlation or decorrelation of the market and its probability of trending or not. This is an excellent tool to help you to do that. It is a lagging indicator, so you can't trade directly off of this, but it gives you a very good idea of future direction and the relative strength and correlation of the market. When all the market is trading in unison, when these are all tightly wound together and trading together, then we will generally see a very nice trending market. But if they are all scattered, like you see right here, you can see most of them all spread out. Of course, you don't count gold and crude oil, but they're starting to decorrelate right now. The correlation, they're tight together. When they decorrelate, the markets tend to be choppy and range bound. And when that goes together with a flat kiss, then the best thing to do is to sit on your hands. Why trade in a market that's just showing a potential to go sideways? Wait for it to start establishing itself in a nice trend, then take advantage of the trends. You can use any of the you can use this for currency futures. You can use it for equities. You can use it for ETFs, sector ETFs. So you can load a sector ETF and the equities that go along with it. Or you can look at different sectors to see which ones are strong versus which ones are weak. So a lot of pairs traders like to put in opposing items because this gives you a very good relative measure of strength versus weakness and whether they're going to be trending either together or apart in those. So it's a valuable tool for doing that as well. Absolutely. Okay. Any specific questions with regards to that Fat Boy, Richard, that you want me to go through? But that's what I use it for. I use it to help me to see correlation or decorrelation in the market and to measure strength versus weakness of the pairs that I'm particularly interested in trading. Okay. Yeah. Melinda, I got your answer. But are cryptocurrencies manipulated the same way that the yeah, fiat currencies are? You know, let me see here. I think I might have just lost volume. I'll wait just a little bit. Okay, now I'm getting a signal that it's back. Might have bogged out there just a little bit, but I think I'm good now. Um, but what I'm looking for is cryptocurrencies are new. They can easily be manipulated just like others. I don't have a lot of experience trading the cryptocurrencies other than just outright, buying them. But I have not actually gotten into full-time trading cryptos yet. So it's definitely a high interest on my radar screen, and I'm going to be spending a lot more time learning cryptocurrencies. But I can't answer that question, DK, off the top of my head yet. And I do know that TradingView is extremely well versed in the cryptocurrency markets. So the more I'm in TradingView, the more exposure I have to the crypto world and to the things going on there, and I'll be able to see a little bit more what's going on that. Absolutely. and the volume behind it. And I will be able to interpret that based upon the response there as well. So very shortly, I'll be putting out a series of videos on TradingView, so we'll be able to show the cryptos on TradingView as well. Look at the Nasdaq. Okay, Nasdaq has been doing quite well. There's a very big demand on Nasdaq recently, but you can see all of that is coming off really quickly. When the Nasdaq moves, it moves either with strength or weakness. So longer time, let's look at see what the longer time was doing, and then we'll just drill down into the faster time frames. All right, see all the strength. See around October, you got a big rally coming in. Hawkeye signaled using our proprietary software, a very nice entry, not only here, but here for tackling that after the correction. Then we got even a third entry. So when you see the alignment of these signals, that's showing you when the longer time frame and shorter time frames come together, they give you very, very good points for entry. And notice how I always say prior resistance becomes current support. Well, you can see it took quite a bit to break through that. Once it did break, had to retest it. And of course, it retested it with positive volume. So that's another strength indication. When that came back in line, then you got another signal to take that. So if you missed the initial signal to get into the trade right there, then the secondary entry was here and the third entry was right here. So those are three chances to get into the same trend. Of course, those trends, you're looking at 150 to 200 points on the Nasdaq. Longer term, of course. Longer term, of course. Daily, monthly, weekly, they're all in line and trending. So longer term, you're looking at that. In between time, let's look at Nasdaq. Okay, we're looking here at 90 minutes, 180 minutes, 390 minutes. So these are set up to look at equities within a normal equity trading day. There are only 390 minutes within an equities trading day, but you can set these to be any time frame that you like. If you're looking at 24-hour currency futures, then rounder numbers, like a 60, a 120, 240, something like that, are a little bit give you a little bit better picture of that. But this big, huge wide bar is showing that there's a lot of interest selling this off as price came back up and was pushing this 6,500 boundary. It just, you can see day after day, you're not getting the response you like. It opens up strong and then closes weak. Now this one's starting to open weak and never came in with strength. So now we're starting to see, boom. Now we're starting to see very responsive selling on this this push. So it's going to be triggering a 180. It's also going to be triggering the 390 into downtrend on all three of these time frames. Longer time frame, you can see that it is still trend long, trend long, trend long. But shorter time frame, we're starting to see the trends starting to change. And now if you're trading at intraday, then you can see that those longer term trends tend to cycle out and give you signals a whole lot quicker. So you're in and out a lot quicker than normal. So when the GDP news and stuff came out this morning, you are already starting to see signs of weakness coming into the Nasdaq. It tried to rally this morning coming up into the open, but never quite made it. Never quite made it to a signal to go long. And so the short was still the strong signal to the downside. Here are the ultra high volume bars I was trying to tell you about earlier. And so you've got confirmation not only on the 3-minute but on the 6-minute of downward pressure coming up into this open and trying to take that. The zones were telling you were topped out here 1, 2, 3 times, and then it just trailed right off and it went right down into not only floor, but it's already broken that. So this is an extremely strong move that has broken the support that was there. Now this support is broken. This zone has gone away, making this the new target if we don't see a correction. Now, it's very possible for this to start channeling or consolidating in this range, building up more energy because it used an awful lot getting to this point. Now it's broken. Consolidation is probably a good thing. Usually when it does that, this is what you'll see. You'll see a nice band of consolidation. Consolidation, if it's extremely strong, then you're going to see this, which we see in the volume. It's extreme. Look at that huge, huge volume bar on that open. That's a lot of sellers coming into this market. Consolidation, potential profit taking, and then target 63.16 to the downside. That it can stop. You'll see it'll probably pause right along in this range here. You can see a lot of action came in here, so this is also an attractive region. Price came up to it, paused, and then broke. So this is an attractive region to stop. So on the way down, look for it to stop here, but with the eventual target being right down in here. So watch for volume, because volume is giving you that. Look at the signature of volume across all of these things. Buying was trying to come back high, but look at this. This buying was giving us fairly significant price bars, but look how anemic that volume is relative to where we're going at. See, so it gives you a pretty good indication of what we're looking at. Price is trying to push its way back up again, but see this bar right here? Okay, volume's coming up. There's no volume at that point. Volume tries to push back up again. You got a second one right there. Boom. No volume coming in. Extreme. I mean, even for pre-market, that's still extremely low. So it's giving you a real good idea that there's not a lot of strength to the upside on this market. And of course, with the rally that it's gone through the past couple of days, couple of weeks, there's a lot of strength in the Nasdaq and in the tech sector, people buying high-tech instruments and so forth for Christmas season. But profit's got to be taken somewhere. And this might be just a corrective profit day on the way to new highs or maybe even new lows. But don't trade off of what you think, just trade off of what the charts show you and tell you. Okay. Okay, Richard, yeah, I use the Fat Boy as a filter. So if I'm looking for trades, if I'm taking the trade, then I want to see the Fat Boy trending in the direction I'm going to be trading, and I want to see that the instruments are all tightly wound. Look at this. See how tightly these currencies are together and going in the same direction? Those are usually indicative of markets that are trending and that are usually in sync with each other. All the markets up to this point were clearly in sync with each other, and then at this point you can see the Nasdaq very quickly has turned and started to go back up. All the other ones are still rolling down very nicely. So you can see we got a very nice volume spike of buyers coming in at this point. So that's pushing the price back up again. So this might be, because of the strength of the down move, this might be another one of those V patterns. You know what I mean by V pattern. We get a big push down and then a big push up right back to the opening price. So watch out for that, because the big push here on this Fat Boy is showing you that there's a lot of energy coming back into NASDAQ, and the others aren't quite ready for it. So yes, I use it as a filter. So if I'm in a trade, if I'm ready to take a trade, I got a real strong signal, I will glance quickly at my Fat Boy. If it looks good and it's trending in the direction of the trade I'm taking, then I'm good to take the trade. Okay, I have NinjaTrader 8 here. I've got the same NASDAQ chart up. Let me see if I can pull that over. Here's my NinjaTrader 8 window for that. So let me pull that up here? I don't know. Maybe I can just show the window. It's a lot smaller over there, but so I can't show that. Monitor 1. No, sorry, wrong one. Monitor 2. There it is. All right, there, I've got it there. So looking at monitor 2, then you can see I've got the NinjaTrader 8 set up. I've got the tool set showing the individual instruments, the Fat Boy and the Kiss set up, and then I've got my 3-minute, 6-minute, 12-minute, and 60-minute chart set up, showing those, showing the volume coming in. So I can expand any of these one charts to look at that, to look at the setup. And to analyze it a little bit better and pop it back down again. Oops, sorry, wrong one. Let's see, which one was that? I hate that. There it is. Ah, where'd it go? There, keep hitting the wrong button. There. All right. So, I've got a couple of other workspaces open too. The forex markets. Here's the Fat Boy. Of course, the same tool set where I'm looking at the trend count and whether the markets are long or short, the particular setups that I'm looking for, and of course all the other instruments are identified by the charts and the setup. So all the tools are there, and you should be able to see that setup and working for you. Yes, and Nahid, I got your email. I'll look for the transfer here quickly, and then we'll get you set up and running on your new Pro package in NinjaTrader 8, okay? Thank you very much for that, and we'll get you going as soon as I get confirmation of that transfer. Philip, I'm sorry I missed that point on TradingView. Did you say they trade cryptocurrency? Oh, absolutely. Yeah, there are a lot of cryptocurrency traders on TradingView. Absolutely. I don't know if I can open TradingView right now. My developer's using it. Let me see if I can. I'll probably boot him out, but let me see if I can open that up. TradingView. All right, there we go. There's the roadkill, trend and stops. We're working on the levels. Right now, the level tool is a little bit rough inside of TradingView. That's the only tool that we're having a challenge with are the levels, the grabba and the ads, because they don't allow you to click on the chart. The chart is very responsive and it's a really great setup. But you can't directly click and place things on the chart. So we're trying to come up with a method to show the levels and to help us to see that using offset. So whenever you see a downtrend, then the levels will paint relative to offset to that first trend dot and so forth. So you can see the sets, and you can also use this by backtesting. So we're looking at trying to get these to toggle on and off, and then we're working on that. But yeah, if you're looking for any specific pairs, then cryptos are actually pretty high on the list. Let me go back to the main page because you can see there it is. There's a currency. There's a whole session of traders that talking about Bitcoins and cryptocurrencies and Dash and all the other tools that you can specifically use to trade using the platform. And so if you're using that, it's a really nice setup. And as far as the trading panel, you can see that from the trading panel itself, you can connect to right now all of these current brokers and more, and they're developing a lot more as well. So I think they're in and works with a couple of more futures brokers as well. But you've got quite a few forex brokers, futures brokers, and of course you can always paper trade those as well. So any of those markets that trade can be traded through these brokers. So we're getting really close to that. And as far as the actual tools themselves, then you can see the data. We've got all the tools: the Fatman, the Fat Boy, all the grab, the heat map, higher time frame tools, the KISS, the roadkill, trend and stops, higher time frame, volume, all the volume pack, the wide bar, and so forth. So all the tools, with the exception of the gear changer, gearbox, and the tool set, so far look like they're going to be here because the TradingView doesn't have a spreadsheet type tabular format that we can interface with yet. I think they've rumored that they can, but not quite yet. And the second part is the tick charts. Well, they don't have tick charts, so we don't have access to tick data for that type of analysis. So those are the two drawbacks of the platform, but it's a popular platform, and we're looking for that to be coming out very soon. Let me see if I can pull that Bitcoin up here real quick. Bitcoin US dollar. There we go. So there you go. That's the Bitcoin versus US dollar spot from Coinbase, and gives you full analysis capability and includes roadkill signals as well. Oh. You mean that screen there? I hate that. All you can do is laugh at yourself when you do dumb mistakes like that. Okay. Well, here we are. TradingView with Bitcoin. This was the like I said, the levels ATR that we're working on. It's replicating itself at the beginning of all of the trends for back testing, but it also gives you the ability to go and you can format that, you can scale it any way that you want, and you can extend the lines to any length, and you can turn on price levels at any of these as well. But it's presenting a challenge for us, so that's what we're looking at. Sorry about that. Yeah, it was on the I think it was the euro. That was what we had it on before, yeah. So we're looking at the trend and stops, the ATR levels ATR, and the roadkill. I can load the volume or any of the other tools, but just want to make sure that you saw that. Bitcoin has had a remarkable rise, but you can see we're starting to see a huge amount of exhaustion coming up into this. And when we start to go nonlinear, you watch for that exhaustion coming in and the correction that follows. So people are taking profits, and they're going to be taking them whenever they want. Just correcting. Okay, so let me go back to some of the questions. I might have missed those. David, Looking at the Nasdaq 60-minute, my zones are different colors compared to yours on MT4. Yeah, there will be a little bit different based upon the data feed from the different vendors. So you will see slightly different colors and positions because they're going to be a little bit different based upon when the bar is actually closed and when it's open. So 60-minute data, you can have a data close on 1 minute and up the next on one vendor, but not on the other. So you will see some differences. It's not going to be major, but it will be some slight differences. So I understand there could be some differences in that. So hopefully it doesn't present a problem. All right, Stephen, you indicated a couple of weeks ago you still look into whether Tomahawk scanner will be made available for purchase. The Yes, the Tomahawk scanner by itself will not be separated, but we have opened up and made the entire Tomahawk suite available for purchase if you want. So we do have a processing model set up if you are interested in just purchasing and not leasing the Tomahawk system. But we decided that we're not going to separate the scanner by itself. We are going to keep it as part of the whole Tomahawk package. So contact us at at team1, team the number 1 at HawkeyeTraders.com, and we'll be glad to answer all your questions with regards to a lifetime purchase of the Tomahawk license. Milind, what are the best indicators you would just for starting out for futures and currencies? Both futures and currencies. The Hawkeye standard package is the minimum package that you need in order to follow our 3-step entry exit method. So if you were to go over into the members area, then you can see that we have in here what we refer to as our 3-step method of entering and exiting the market, and the trainings behind that. So we have all that and the archives of the videos with it. And in addition to that, we've got the teaching on the 6 ways, but the minimum software that you need in order to follow that is the standard package. So the standard package gives you the Hawkeye trend and stops, the heat map, the volume radar, the pivots, the wide bars, of course, the levels ATR, the GRABA, the ads tool. So all the power and trade management tools all come in with that. What it does not include, and which I highly recommend, is if you're going to be trading in currencies, then I would highly recommend that you also include the Fatman, and it does not include the roadkill. The roadkill is the tool which is not required in order to follow the entry exit method. As you can see, I can look at the chart here, and then based upon its trend, volume, and heat map, I can look at my second time frame to see if at that exact same time alignment occurs, and then the third time frame to see if alignment occurs. Once I see alignment, that gives me my entry criteria, according to our 3-step entry method. The roadkill shows you that alignment on all 3 time frames. So if you have 2 roadkills loaded like I have here, then you can see alignment of the first time frame. If this is a 352, then my second time frame will be the 704. So the alignment of the 352 with the 704 gives me a signal that the volume has agreed to a directional trade. The third time frame is the 1408. It's shown by this line right here. This is the volume of my 1408. It also says that it is in agreement with the current direction of this 352 chart. So the alignment of those give me a very strong indication that this is trending in the direction of the longer term trend, which is the highest probability trade direction. So that gives you a very nice trade entry with a potential for profit on the shorter term. Okay. All you're doing is trading probabilities and statistics. And so looking at the probabilities of the trade, anytime you see an alignment with longer term, the probabilities are in your favor that the trade will be continuing in that direction. So the roadkill, the Fatman and the standard package, or the roadkill and the standard package for futures. Okay. I like the Fat Boy and the Kiss because they give me very good filter indications of a trade direction. And so the Fat Boy and Kiss are usually my filter tool go-tos with the roadkill and the rest of the standard package. So the roadkill gives me the ability to look back, and then the standard package gives me the ability to see those trades on multiple charts. Man, that's serious. Look at that. What did I tell you? Now it's going to hit this. It didn't even pause. Okay, that's serious. It's going to hit this and it's going to stall right in this range right here. It might even do it to the ticket, if not very, very close to that. So watch for this to come to a pause right at this level and and hold. But that Nasdaq's seeing some serious action right now. The pullback simply paused the market. It closed up and then closed right back down again, but the trend dots continued to fall. So the 6 ways the market moves kept you in this trade and kept you in profit as this trade is continuing to weaken with strength. Notice how the trend is continuing to build with volume, and that volume is continuing to stay strong and responsive to the price. So I like that. What inputs do I use for my zones? I always use all the default inputs. I like a 60-minute time frame because I've found historically that price tends to be a zone magnet on the 60-minute chart. So the zones draw price to themselves on a 60-minute scale to a higher degree than most of the other charts. So I like to have a 60-minute to give me profit targets and directions and trade targets and so forth. So let's see, Marcel. Can we look at the Aussie yen? I want to build a long position at the right time, okay? Let's look at longer term Australian dollar, Japanese yen. All right. Australian dollar, Japanese yen. Longer term based upon daily, we are in a support range. Okay, price is broken and has come down to rest in our demand region, but I don't see any buying yet. They're pivoting, but all of these bars are still red. I'm not really seeing any really responsive buying yet. So right now, this looks like it's still consolidating, and I don't see that carry instrument, the carry trade coming in at this point. You can see on the shorter time frames, of course, it's stalling as well. But you got to start seeing buying volume coming out of this demand region first if you want to see that Aussie yen coming in. You can see that the Australian dollar is definitely building with strength, and that the yen has peaked and is starting to come down. So that looks like a potentially good trade longer term. But as you get closer in time, that Australian dollar is just starting to roll over. It's not really continuing to build. And then as this was building with strength, the yen wasn't weakening. It was staying extremely strong. So even at this point, it was extremely strong relative to any of the other currencies. But now at this point, we're starting to see that the yen is the second weakest currency, and the Australian dollar is stronger than that yen, but it's starting to roll as well. So these going in the same direction only points to a continuation of consolidation. We need to start seeing buying volume coming in on the Australian dollar with strength. So this could come down. It could give us a nice pull to fair value and then hook back up again. See how the British pound has come down and then started to hook back up again? Well, that's what we're looking for on this yen. If this yen comes down, hooks, and starts to come back up again as this Japanese yen's continuing to go down, that's where you're going to see your price move, and that's where you're going to want to be in on the trade. And that's my 2 cents worth. 10:30, Watch out, crude oil inventory reports today right at this time, so watch out for that. I'm starting to see some response to that, so you can see crude oil is definitely jittering, but I don't know what the news was. So I'm watching for that. I have a setup here where I'm looking at all the major currencies. I mean all the major futures, the S&P, the Nasdaq, the YM, the Russell, gold, and crude oil. Crude oil is on the January 18 contract, by the way, if you didn't already know that. Looks like we got a nice little signal in gold for a long based on our 3-minute, 3, 6, 12-minute setup. So if you're trading gold, we got a nice long signal in gold. Now we're getting mixed signals. We are getting some weakness on the Russell, but we're getting some strength in the Dow, extreme weakness on the Nasdaq, and kind of a meh in the S&P. Crude oil is giving us a nice 3-minute wide bar, so we'll use that to determine the direction of the trade following that, but we always trade the direction of the breakout trade bar, and that's how we trade the news on crude oil. Okay, Marcel, I'm looking at your emails. I remember responding to those, so we'll set you up, and I'll look at the email to see where you are now to make sure that we get you set up on that. So you had asked, can you say the colors and the zones mean? Okay, if you pull it up and if you look at the analysis techniques, the definitions of the colors, if we were to go to the zones, are defined here. We're looking for bounces. So a brand new zone is colored cyan or aqua. Okay, bounce one color is blue. That means that price bounces off that zone. If it interacts with the zone and reverses, or if it hits the zone at any point, then it turns it blue the first time. The second time it hits it, it turns it orange. The third time, it turns it purple. The fourth time or more, it will turn it brown. And then if it hits it, if it pierces and goes through it, then we refer to that as a dead zone. So it'll actually kill the zone and make it dark gray if you display it. You have the ability to turn on and off the dead zones. Show dead zones is you can turn it on or off to see what it is. So all those are available within that as well. So those are the significance of the colors. Okay, the colors show you the direction. When you see a nice trail of light blue zones, either in this case you see light blue supply zones, that's indicative of a strong downward trend. So that they will tend to stay in that direction of that trend until any of these are challenged. And then the first time one of those are challenged, that's your money bounce, the high probability reversal. So if this does come up and challenge this, then the first one that it hits, chances are really good that it's going to reverse back down before it breaks it and continues back up again. So the power of the zones are phenomenal. Looking longer term or shorter term, they're incredibly accurate on any of the time frames that you're looking at trading. As far as inputs, I just use standard, the default inputs that come with the indicator, and I'll just leave it at that because we spend a lot of time setting it up, and once we ship it out, then I just like it just left just like that. All right, any other questions? Looks like we're out of time. You're very welcome. Trade safe. Make sure that you have your software properly set up, have a trading plan in place so that you can trade these markets with confidence, and make sure you ask questions if you don't, because that's what I'm here to help with. You're very welcome. All right, thank you very much for your time. This has been recorded and will be made available in the members area and on the Hawkeye Traders website under the education menu. So if you go to hawkeyetraders.com under, oh no, this is the members site. Under education, go down to the training room videos. So if you're not a member, this is where you'll find the last 5 Wednesday videos. So you just click on that and go to the site. This is last week's video. Today's video will be placed here. This last week's video then will be bumped down into this list, and then the 18th of October will be taken out and the others will trickle down. So I have a rolling display of the last 5 videos here for your viewing pleasure, and then to help you find out more information about that. So all the training rooms will be posted there, or if you're a member, just simply go into the resources area, click on the Wednesday demonstration videos, and all of the previous videos will be listed here. I mean, all of them. Okay? All of them. All right, they just keep going and going. So we've got a lot of data. There's a lot of training on there. Hey, David. Okay, great. Yeah, let me show that real quick. Go over. Here is the MT4. Oh, let me show the right screen here. Here is the MT4 Tomahawk system. I know that you've used it before, absolutely. So yeah, it's still working, and we're even making the setups and improvements, including the volume paint bars. So all the volume paint bars are also part of that. So it's really, really easy to see these reversal signals coming in. So when you see a trend of green, but then you get a nice blue bar, all right, you know the direction of that's changing. When you see the pullback up into prior range, that's the highest probability short right there. All right, you see the trending up. This is a big, huge bar coming up. Okay, so Tomahawk is an excellent tool for directional trades. And not only does the scanner show you these setups of the total weakness in the pound versus the total strength in the Australian, those are the 2 dominant pairs right now. Strong Australian versus a weak pound right now. These are based upon 1 minute. Here's a 2 minute. This is a 3 minute. This is a 15 minute, and this is a 60 minute. So you're looking longer term strength versus short term weakness. Here you've got short term strength versus longer term weakness, and so forth. So it helps you to see that. So your Euro Aussie, nice signal set up, potential 25 pip move right there, just as simple as set up. The New Zealand, looking at about a 20 pip move. The yen, looking at about 13. There's no trade here on that euro pound. This was a great entry point, but I will take it from here just to show that. 3 pips with a 6 pip pullback. And of course, the ability to trade multiple time frame offline. So this is a 1 minute, a 3 minute, and an 8 minute Fatman on the chart as well. And of course, if you have MT4 Professional, these integrate with that just as well. So, absolutely. We've got a nice price model, and if you already own the Hawkeye Professional package, then you get the members discount on top of that. Yeah, most of it is the major changes are in the EAs. So we've got 2 EAs that we've got set up on there. Let me see. I don't have them loaded on this one. Nope. This I don't have this. Sorry. I don't have the traders loaded on this MT4. I've got another MT4 set up where the You've got the regular Tomahawk Trader, which is a one-button setup for trade direction, and there's also the Fib Trader. And so we've made some changes to both the Tomahawk and the Fib Trader itself. So I don't know if you've seen any of those updates, but those have been set up as well. The Fibonacci Trader. So if you've already seen those, then since then no, there hasn't been any major changes since the last time you saw it. If you're interested, it is available for purchase. Contact us at team1@hawkeyetraders.com, or if you want to try it out and subscribe, then just simply go to Hawkeye Traders website, and I'll show you that right now. HawkeyeTraders.com. Under Education, of course, go to the Tomahawk Forex Trading System. And this will give you a little bit more background of what the system is about, who has developed it, and what the package includes. The reason we just have the trader and the Fib Trader for MT4 is that TradeStation doesn't have the ability to trade the Forex market any longer. They give you the full analysis capability, but there's no way to trade. You have to trade directly through your broker, or if you're on MT4, you can trade directly on the MT4 platform. So you can do that. So you can evaluate the software. $47 gives you a full 30-day trial membership. If you continue with that, then it's a $147 a month. If you already own the Hawkeye package, then we give you $50 a month discount. And if you want to go ahead and do an outright purchase, then like I said, contact us. We've got a pricing model put together for purchasing that outright. All right. Thanks, David. It's good hearing from you again. All right, I'm out of here then. Thank you very much for your time. Let me go ahead and stop the recording at this point.